Hi, good afternoon. You're watching the closing trades right here in 18 hour with me, Aisha Faridi, Avan Dabash also with me. And the Nifty is largely consolidating today. Just, ambling around in a very narrow odd band. Don't go by those jagged edges. We barely moved today. So a day of consolidation, really. We're staying put at that 18,300 level. Of course, globally as well, you're not seeing any big moves. Europe has started off flat. Similar is the picture with the US futures as well. That's ahead, of course, of that big data, all-important US inflation print. Having said that, just looking at the internals, while we're staying put at that 18,250 level, we're back at 18,300 for the Nifty futures at least, pretty much around the closing in trade yesterday in terms of the index level. You've got banks, metals, which are on the dragging side today, and power and media, which unfortunately don't have as much weightage. They're the ones which are index-wise or sector-wise actually holding up in trade as we speak right now. L&T, it's really all about earnings, the fag end of that, and you've got L&T, which is still awaited, and that stock unfortunately is seeing a bit of a pressure. It was down about almost 1% at one point in time, and right now as well, it's still lower by about 0.7 as we speak. The commentary, of course, is on the non-core assets performance is something that the street is in particular looking out for from L&T's earnings. 23.58 as we step closer to its earnings. That's L&T in trade. But for the broader market, Avan, it's pretty much neck and neck.
Absolutely, it is. And there are a few newsmakers, and they're all in the spotlight in today's trading session. So just going to run you through some of them. The PSU banks, and we discussed this at the get-go as well, about how a lot of these banks are coming under pressure, and that's largely on the back of the fact that the ECL model may be imposed by FY25. Do remember, this is with respect to some of these banks, the expected credit losses for a lot of these PSU banks. So that's going to be in the spotlight. The fact that Canara Bank saying that they may need 40,000 crore provisioning over 5 years. Bank of India, Canara provisioning of about 4 to 5%, and CLSA as well is saying that they see 0.8 to 1.5% of loans as provisions for PSUs. Moving right on, then let's take you through some of the mid-cap earnings then that are in the spotlight, and you do have a week of numbers being declared by BASF India. In fact, their margins have contracted to just about 4.1% versus 6.4%. You've got the EBITDA as well, which is lower, and profits have come cracking lower by nearly 45%. There's also JBM Auto, which came out with its quarterly numbers, and the street is duly reacting. And on the flip side, SCI, a bumper set of earnings, Birla Corp, along with Five Star Business as well, which came out with a healthy set of quarterly numbers. IndusInd Bank is on UBS's review. They've got an upgrade rating with a target price at about 1450. And finally, Siemens, UBS has hiked the target on this counter to about 4,500. Okay, so those are all the newsmakers in today's trading session. But as we were talking about, Nikunj Dalmia as well joining in, our managing editor. And Nikunj, it's for now continue to remain a market that is in a tight consolidation mode while we're waiting for the US CPI print. No complaints.
No, I mean, it's done very well, if you frankly ask me, given that where everyone thought that, okay, the rallies peaked out after, when we had a poor Friday, everyone thought that it's game over in the short term. Yeah. That was followed by a good Monday. Then came a choppy Tuesday, and I think it's a stable Wednesday. So I would say that the bulls really have an upper hand. I mean, look at the intraday graph. You've had one big decline, and from there you pop right back up. So for me, it's a bank Nifty which is important, which is showing you signs of uptick. And it is, again, the price action in the small and the mid-cap index. I mean, there is just so much of disbelief that every time markets are going higher, the retail and the HNI investors, they simply want to sell. And it's just one of those crazy phases of the market where domestic institutional investors are buying, FIs are buying, Sandeep Sarwal is ready, he's also buying. And the domestic retail, which has been buying for 2020, in 2021 and 22, suddenly the numbers are not matching up. So Sandeep, DIs are buying, FIs are buying, you're buying, Kunal is buying, Nuresh is buying. Who's selling?
So I think selling is lesser than buying. That's why markets are going up.
Yeah, but net, it's like what we saw last Friday or what we saw yesterday. It's not been a one-way rally, even though institutional numbers were positive yesterday.
That's true, because 80% of the people are suspect of the rally. So they don't believe in this rally. 20% think that market should actually be rising up. So And then there are people who don't have a view and they just participate. So I think that's the state of the market, which is good. So that helps the market sustain at higher levels, and the naysayers will come in at higher levels.
All right, we've also got Kunal Bothra as well as Naresh Merani. Let's find out what their take is. And are you guys also buying in a market like this? Kunal?
So yeah, I think broadly it's been a choppy market in the last couple of days, and that puts off index traders. But then no complaints when you have such kind of a strong intraday recovery for the indices. So net the pattern in the last 4 or 5 days. So I think as Nikunj was also alluding that on Friday we had a sharp selling. The view was that the markets could probably crack down a bit more. Monday was a completely contra day for the indices where we saw very good recovery. So when you have such kind of a choppy session, but the index is unable to break out of a range, we expect the markets to get into a consolidation. So my sense, 18,000, 18,350, 400 could be the upper end of this consolidation. The only concern for the markets so far is that the weakness in the bank Nifty, because lot many PSU banking names, the larger cap private sector banks, these stocks have started to show signs of weakness. So I think if the markets have to go into a bit of a correction or a cool off, then I think bank Nifty can underperform.
Naresh, what trades are you punching in right now? The index may be quiet, but fortunately, a lot of stocks which are seeing traction.
So, seeing a shift in the banking space in terms of leadership, that's where I have Axis Bank as well as IndusInd Bank. These are the two names which look interesting. IndusInd Bank today has finally started showing momentum. The stock has finally crossed the recent swing highs. Strong momentum here, top gainer for the day, shows there is momentum for the first time. Out here, I would expect it to go back to the 52-week high. So, expecting IndusInd to do well.
They are in Bombay. Okay, there you have it. Let's get in a take then, Sandeep, from you as to what the outlook is when it comes to L&T as the street is closely eyeing the quarterly performance. What is it that you would like to hear? Do you think it's going to continue to remain a steady quarter for L&T, and any particular commentary that you think the street will await?
L&T is a clear longer-term story in India and I think for the next few years also. Now the only question is that will there be a pickup in execution? And I think that's the most important thing to sustain the valuation at higher levels. So they've been giving a lot of orders. If you see the order flow announcements, they've been very strong. Now with there being a scenario of now complete normalcy, and next year could be the year where there are no execution challenges, then do they see an uptick in the execution cycle? And I think that will be the most important thing I'll be watching out for, and that will determine how the stock will go.
So at what price, Sandeep, you would like to say that, okay, L&T is played as per the script and I'm very happy, but I think it's time to lock my gains. What would be that level? 3,000, 2,500, above 3,000?
Yeah, so somewhere between 2,700 to 3,000, one would like to trim the positions. Whether one would like to completely exit or not will depend on various factors which will play out. It will be order flow, execution, the scenario of inflation, interest rates, etc. So I think there are a lot of dynamic things. As of now, things seem to be okay for L&T. And if you see among portfolio holdings of large funds, despite L&T doing so well, it's still pretty underowned.
Underowned L&T, and the numbers are awaited today. Of course, the commentary on the non-core business, that's something that the street is also going to be eyeing out for. But time for an ET exclusive, and the auto market is going to or rather be in the top gear this year, as we understand, with over 100 new product launches which are planned, which is nearly double that of last year. Now, the major launches will come from market leaders including Maruti Suzuki, Hyundai, Tata Motors and M&M. Let me take it across to my colleague Sumit Chaturvedi and find out which are these launches and who's going to win the race, Sumit, shall I say, and jazz up the Motown segment.
Well, correct, Aisha. Now, last year there were clearly very good sales numbers for many of the players now, and boosted by that, clearly enthused by that. This year they have planned 100 new launches, but that will include variants, facelifts and other. Also, we have prepared an exhaustive list of these launches, most of them are going to be in the SUV segment, sports utility vehicle segment that has been dominating Indian market from the last many years, and other big launches will happen in EV segment. So beginning with SUV segment first, well, clearly market leader Maruti Suzuki is going to launch its Jimny, which has been quite awaited. Very soon, Jimny will come. Maruti will come with another SUV, Engage. Very soon, Honda is going to come back to SUV market with Elevate. Exter is going to come from Hyundai's stable. Also, Citroën, the French car maker, is prepared with the C3 Aircross. We're talking about all new products currently. These are not facelifts. And Kia Sportage, Nissan X-Trail, and Jeep also coming with its own SUV. So SUVs will clearly dominate market this time. We have counted 10 of them currently. But going to EVs now, and EVs, clearly India last year saw a huge, we can say that, excitement in EV space. This time more excitement will come from luxury players. Skoda is coming with its Enyaq, Volvo C40 Recharge, and at least 10 more EVs, including Punch electric vehicle, will come as a new car this time. And coming back to facelifts, well, that is a dozen facelifts will come because companies want to keep on engaging customers with facelifts. So there we will be there. One of the losers of the markets is clearly sedan segment, and there are only just two launches planned this year. Toyota will rebadge Ciaz, and Skoda will come with its Superb. So these two sedans will come. We can say that these are the mains. But a number of launches also happening in luxury car market in India. A dozen of them going from Audi A3, Merc GLC, 5 Series BMW, and M2 to Lexus UX. So clearly, customers are once again going to be spoiled for choice in the market. Another reason is that there have been many game changers over the last few years. XUV 700, we have seen it changing the game for Mahindra and Mahindra. Same was done by Grand Vitara for Maruti Suzuki. Toyota Hyryder is there. So market is clearly ready with a lot of products. There are going to be challenges also. Chip shortage is one big challenge. That is why there is always a waiting list on cars. But it's quite clear that this year also customers are going to be spoiled for choice. We have counted around 50 names, new names for the customers here, but 50 more launches, facelifts, variants are being planned, and this is going to jazz up the market. Remember, 50% of manufacturing of India comes from auto space alone. There are hiccups always, but customers are always ready to buy. There are dangers of slowdown happening in many sectors, but never in this sector, which has always been the favorite of buyers in India.
Sumit, which car company has the maximum number of launches? You have the sheet, you can actually count it for us.
Well, if we start taking a look at it, clearly this year is going to be, once again, we can say that Maruti is here because it's going to come with 2 more launches, and 2 have already happened just now. 2 have happened and 2 more coming. So it's going to dominate the market. But interestingly, Honda, the car maker which was once written off from India's car space or the minds of the car buyers, is making a comeback with its Elevate SUV. CRV, we all remember CRV used to be one of the very aspired brands, CRV, Honda CRV, but then customers, they discounted Honda for SUVs, and now a few days ago it announced that it's going to come back with Elevate SUV in the Indian market. Though it's quite late to come to this market, but it's going to come and try to convince buyers that it has a convincing SUV for them. But 12 to 15 more SUVs coming to India. Look at the crowded space here. Almost all car buyers going to SUV. There was a time when compact sedans were ruling the road. There was a time India used to be called the hatchback or the small car hub in the world. But now if we look around the world, there are no takers for these small SUVs, and they're loved by Indians in hordes, and clearly that's the reason why companies are launching them. And most of the companies, if I tell you, are launching in this segment only. Maruti is the biggest player here. Citroën, French company, coming, and the others have 1 or 2 SUVs, small SUVs. But clearly Maruti here trying to dominate, maintain its dominance in the market with these launches.
Sumit, clearly one thing is extremely clear with all the 100 launches that you gave us a color on, that it's going to be the year once again of SUVs, right? And not as many sedans.
Absolutely, sedans, they stopped to be flavor of the market when these SUVs came in, and they clearly took the whole market by storm. And here, the first movers, they clearly had the advantage. And if I tell you, Renault had the first movers advantage there, and that market was taken over by other car players. Tata came later, but Tata with Nexon, it just turned around the company. Nexon was one of the first products that came in this market, and Tata clearly it had a runaway success with Nexon, which was a small SUV, and now it had come with Punch also, which is a hatchback SUV, hatchback in a SUV form. That's another new thing coming for Tata. So it has helped Tata turn around the whole company. Then we go to other players, including Hyundai, which was a latecomer in the segment, but took the market by storm with its Creta and other SUVs. Maruti was a very late entrant. It didn't have any SUV in its portfolio, so it had to play that catch-up game with Brezza and other products. And it interestingly had a tie with Toyota there also, and both are now rebadging each other's cars and coming there. But yeah, you rightly said that SUV is the flavor of the season, will remain the flavor of the season this year as well. It has been there since the last 4-5 years. But there were days when SUVs were liked for their 4x4, 4x4 approach, or the big beefy overall beefy approach and design. But now these compact SUVs are the flavor of the market. 4 to 5 months waiting list is normal on these SUVs. And as the festival season comes near, by the end of the year, more and more launches will come.
With lots of cars, and for a change, Sandeep Sabharwal has not disconnected. Car launches is something which always excites him, because he always changes his car every 2 years. So 100 new cars are coming this year. You can buy a couple of them.
No, not 2 years, 5 years.
Okay, so 100 cars this year. Time for you to
But
upgrade and
Sumit
buy a
never
couple of
mentioned
them.
the list from Mercedes,
It is,
from
there is-
BMW, from
No, but
JLR.
you got, I think Lamborghini has already launched one.
So that's a
Maybe that's what Sandeep is looking at.
Yes, Sandeep, you want us to revisit the list once again? Ultra luxury, 1 crore plus cars, which will be launched in 2023. I can WhatsApp you also if you want.
A lot of them are getting launched. In fact, a lot of the premium brands are actually getting into EVs, and the EV products are also very good. So I think for the next 5 years, at least for the premium segment, we'll be all into EVs.
Historically, we've seen that when a company goes through a fresh launch phase, that stock tends to do well, sales migrate. Could this year be the year for Maruti? Because Mahindra & Mahindra enjoyed their spot in the sun, so to speak, in 2022 and 2021 and 22 because of the XUV launches.
I think M&M will also do well. Maruti will also do well. Now, the reason why we cannot discount M&M is that most of the companies are now coming into segments which, as it is M&M's core product. So if the overall market is moving towards SUVs, and then the market leader in SUVs has to do well. So some amount of demand gets from cars will get diverted to other segments, etc. That's possible, and that will happen also. Some market share could also go out. But overall, if the market expands, then in terms of absolute numbers, they'll do well. Secondly, for a company like Maruti, the bigger advantage will be that most of their cars or the sedans or the smaller cars were in a much lower value segment. So even if they don't increase the numbers so much, even if the volume growth is, let's say, 5%, 10%, they are guiding for around, I think, 10, 12% this year. So even if it's lesser than that, the value growth will be much bigger, because the more expensive cars will get sold more. So I think that's the advantage for Maruti. And again, Maruti is a very under-owned stock. No one believes the story so much. And to that extent, there's a potential to do well.
Yesterday's star has today become today's dodo. Nuresh, you had Tatacom on your radar, I think, in the morning. Price target 1400, if I distinctly remember. Has that trade reversed?
Not really. We've just seen a downtick of 1%. And this is very normal nowadays. We are seeing a move up, then a fade off for a day or two, and then we again see a move up. So in this case, yesterday was a nice 3x volume jump up. So today also it's still a buy. Out here, it becomes a much more better buy given the risk reward is more favorable. We have seen this happen across the last few weeks. We don't see runaway rallies. We see a big move, then a pause, then a big move again. So positive on Tatacom.
Right. Tell you what, we'll slip into a very short break. Come right back. We'll discuss a lot of those earning candidates, price reactions, and what the charts look like, as well as the fundamentals after this short break.
Back to closing trades and absolutely quiet right now. You've got that US inflation print as well, which the street is awaiting. So today, it's not just us, but even the world markets are very, very quiet and in consolidation mode. It started off absolutely flat for the European markets, drifted down a little bit in the red, but the US futures as well are standing absolutely flat as we speak. But for us, we'll have additional lot of important earnings as well to react to. So first, let's hear out the management commentary from Lupin after their numbers.
Largely, we're back to growth. Strong double-digit growth is what I would expect. If you look at respiratory, if you look at cardiac, if you look at newer areas like GI, if you look at even CNS, you see strong growth across the board, and that's something that we would expect to continue through the quarters now. So double-digit growth is what we would expect.
So combination of margin improvement, stabilization of the inline business, plus the new product launches.
Okay. Just a slice of what the Lupin conference call was all about post their numbers. Sandeep, I don't know if you've analyzed the pharma numbers which have been coming off late and anything that stood by for you.
Not very significantly. It's just that Lupin is the one where the turnaround has been expected for nearly 2 years, but every quarter they're disappointed. This is the first quarter where there seems to be some signs of turnaround. But given the checkered history of the last few quarters, it's possible that investors would like to wait out for another quarter, see if it's consistent, and then give more value to Lupin. So Lupin remains the dark horse. So if they sustain their turnaround and can actually generate profits, cut down the debt, then it could do well because it's, I think, still around 70% off its peaks, historic peaks.
Saw a 3% recovery from the intraday lows on positive management commentary. The management, of course, indicating that it's the US margin profile which has managed to aid the business for Lupin this time around, and that the FY24 margin would be north of 15%. That's the word coming in from Nilesh Gupta of Lupin. But you know what? There's also L&T awaited for its numbers. That, of course, is Escorts Kubota. But let's quickly take it across to Lisa and find out what we can expect from L&T's performance today.
Decent set of numbers from L&T this time around. Revenue is expected to be led by both core as well as non-core businesses. Consolidated revenues for the fourth quarter could come in at about 59,250 crores, which will be an uptick of about 12% on a year-on-year basis. As far as margins are concerned, they are expected to be largely stable. We are expecting margins for fourth quarter to come in at 12.4% versus 12.3% that the company reported same time last year. And we are expecting flat margins on a year-on-year basis because of unfavorable input prices that the company experienced in the quarter gone by. Let's also talk about order inflow position then. Order inflows are expected to come in at about 70,000 crores, and this will be led by hydrocarbon, building and factories, power and TD, and metal segments this time. Let's also talk about key monitorables then. Margin trajectory and raw material pricing, commentary from the management, momentum in their green energy orders will be the key monitorables as far as L&T is concerned. But all in all, we are expecting decent set. Revenues could grow at about 12%. Margins are expected to be flat.
All right, that's the expectation from L&T. Thanks very much, Ashesha, for those details. Naresh, wanted to get in your take on some of the other stocks that are reacting to numbers. Aarti Industries, for instance, the management came out with a challenging near-term industry outlook in their conference call. The stock is down and out by 9%, and there's BASF India as well. Margins contracted and profits as well at 82 crores, a bit disappointing. What do the charts look like?
So one thing has been clear for the last 1 year, the whole specialty chemical segment has become a tough one. There was a lot of over rally, very big moves, and now we are in the downtrend. Some of them have started to making a bottom. Some of them are still in the process. Aarti Industries is still in that process. The stock has corrected from very recently, even from 700 all the way down to 500. So not really looking at it till the time we spend 6 to 12 months doing a consolidation. Same is the case with BSF. The stock corrected from 3,800 to 2,300. If it breaks 2,200, it would be a fresh breakdown. So out here, the whole sector as such is something which is avoidable. There are relatively better choices. So not on the radar, not looking to short, given that most of the price action happens around results. So for now, it's a avoidable sector.
What have you done with your position in Delta Corp? A lot of yes and no. I look at mutual fund holdings, Quant Mutual Fund, couple of the mutual fund schemes they've bought into it. Suresh, Delta?
So Delta continues to be a stock which has been a surprising one. The stock did not really bounce back. That 190, 200 remains a zone where it finds a support. So it's a thematic bet wherein you take a basket. Some of them will not do great, stay at the same place, but some of them would go up 50%. So it's part of that whole opening up theme. Bullish on it, but the price action has been flat for the last almost 8 to 10 months now. Would be looking to add it whenever it catches momentum, which would be above say 230 levels.
The opening up theme, ये 2 साल पहले था.
So holding on to them from those times.
Okay, fair point. Sandeep, last we discussed with you that you bought into Tata Motors. Anything else you've added in your portfolio or in your client's portfolio in advisory capacity you're telling them to buy?
So those additions keep on happening, but I think among the stocks which we were holding and where we are now buying again is that theme which Naresh talked about, but a stock which consolidated after moving up a lot. VIP Industries, where the results were a bit below par, but overall growth outlook, margin outlook, etc., continues to remain pretty strong. So I think it's and in weak consumer demand environment, this segment is now doing very well as the international travel is also opening up. So this is one stock which I think could be an outperform on the mid cap side.
As likes VIP Industries. But Kunal, Bajaj Finance, it was an absolute no-no, let's say 3 weeks ago. Then came the FI buying, and then the stock has just, in a sense, it's been a linear move. It has just, pushed above the 200 DMA with some amount of force and gusto.
Well, yes, Nikunj, and I think it's changed the perspective for the entire financial services index as such, because most of these, financial services names, these stocks were actually going through their own phases of consolidation. There was not too much of a coherent move, but this move for Bajaj Finance has completed a classic double bottom pattern. So the previous low the stock had made was around 5,500 levels. The break of this pattern is around 6,450 mark, which means give or take almost 1,000-point kind of a double bottom pattern for Bajaj Finance. And if we look at the breakout point, then we are expecting the stock to come back towards 7,400, 500 levels, possibly in the next 2 months or so. So the upside potential now improves significantly for the stock. And add to that the breakout of the 200 moving average, which I also believe is a very key factor in terms of the stock price trend, because I think since the last 4 or 5 months when Bajaj Finance was actually falling, the stock was unable to break below the 200 DMA. So this breakout on the upside could be a strong change of events for Bajaj Finance over the near term.
Right. Okay, we're going to take a very quick break on that note. Sandeep, we'll let you go. Thanks as always for joining in. Quick take at what the market is up to. Actually, nothing at an index level. We've recovered a little bit of ground, but just skirting around that 18,330 odd level. IndusInd Bank, that's your big winner today, as is Bajaj Finance. We'll take a break when we come back the last half an hour of today's trade.
Vineet Bolonchko joins us, Head of Research with Vector Securities. Vineet, welcome to the show. Thank you for joining us. Before I come to you, what did we have? We have a nice little rally on the markets. Hello. We are up about 100 points. Let's put that fat band out, which will just, in a sense, capture that from the day's low, which is just in and around 18,200. We've had almost a 100-point rally. So that's the Nifty for you. It is now confirming that institutional buyers have appetite to buy even at higher levels. Vineet, what's your view on the market? Do you think best part of the gains are still left, even though we are up 1,500 points in the Nifty?
So I think, we are just kind of getting the momentum together, and we're taking cues from the global markets. The US markets, in spite of absolutely pessimistic news, is hovering around the high levels. And we believe that once the scenario around the debt ceiling is resolved, markets will inch higher. We are quite bullish on that space, and we believe that India will outperform massively in that run.
Look at global markets, the more I'm forced to think that US banking sector will slow down. They will be forced to slow down after the problems in the regional banks. What would be the implications of that on the world economy, on demand, on global GDP? Because everything is interrelated. US banks don't lend, if they lend less, that's bad news for everybody.
Yeah, so I think India is in a sweet spot to take benefit of that entirely. Reason being that we are extremely cost competitive. We are significantly lower in cost compared to China. Europe's costs are going up. So naturally, what is going to happen is that sourcing is going to move to India purely from the economical standpoint. Number one, we are under leveraged. We have got spare capacities. Our organizations are on the ramp up of capex. Interest costs are bound to remain very, very benign over the next 2 to 3 quarters, given the fact that the steep inflation climb of last year would get kind of suddenly become a base effect. And I believe that these all portend very well for the Indian economy, not only from the standpoint of the domestic consumption, domestic economic recovery, as well as an export opportunity that is staring at us today.
Right. Vinay, just stay with us. Lots more to address with you. But Aarti Industries, that's been bleeding in today's trading session. What exactly is dragging the stock? Sharad joins in from our research desk to analyze, just that. Sharad, why this plunge and nosedive on the stock?
Well, yes, Aarti Industries came out with its results yesterday, but do remember the stock went down as low as 10% on an intraday basis. Now, this comes in on a post-earnings con call where they have stated there would be a weak outlook for the industry in the medium term. Apart from that, they have also stated that the margins, they are expected to normalize by FY25. That means the margins pressure is expected to sustain for the another financial year as well. Now, looking at the demand, that is where the commentary has been weak. They have stated that there is a prolonged softness coming in the demand, especially in the discretionary segment. Apart from this, do remember that the company itself is actually exploring non-regular markets like China as well for their expansion. But do remember that the demand impact we are already seeing from the second half of FY23 as well. And the stock itself has derated by 19%, and the street is also expecting an earnings cut between 19 to 22 odd percent. Now do remember that a higher OPEX will actually lead to lower EPS as well as margin expansion growth in the short term as well. And for FY24, the guidance actually, if you look at it, the volume growth is 25%, but the EBITDA growth is just 15%. That is what the street is not liking it, and that's why we can see the fall in the stock prices as well. But going ahead, what are the important triggers for the stock? First one is, of course, the revival should be seen in the demand recovery, and also the visibility comes in, especially for the textiles dive, where almost 20 to 25% of revenue kicks in, and also an improvement in the discretionary segment.
Very much, and clearly that stock is under acute pressure in today's trading session. Meantime, Vineet, just wanted to get in your outlook then as to what the sense is when it comes to capital goods. For instance, you've got UBS's report as well, that's on Siemens. They're talking about a strong growth phase that's underway. We're awaiting a strong set of numbers from L&T. Where is it that your preference lies?
So we like all these counters that you just mentioned. We also like the fact that, a lot of the recovery is going to be manufacturing oriented. And there are other stocks like Wendt India, Cummins, which are also engineering plays. We like Kirloskar Oil. These are some of the stocks that we believe from this space of capital goods should offer significant investment opportunities for investors.
You've been advocatory of Adani group of stocks, and suddenly markets have stopped talking about them. Why is that?
So if you see the Adani issue, right, we have the stocks were hammered out. The markets have suddenly recovered a bit, and their status quo. The SEBI has asked for a 6-month extension. So as long as the air is not cleared on the corporate governance side, which is the SIT monitored by the Supreme Court, I think the stocks will languish. And we believe that until that, they don't get a clean sheet or, a positive report coming from there, getting growth capital for the group as such would be a challenge. And for Adani, which is so heavily centric on infrastructure growth, right, they would require growth capital. So we've already seen them cut down their spend in Adani Enterprises from 5.2 billion to about 3.8 billion. So that tells you the challenges that they face. And, notably in the case of Adani Enterprises, what was important was that, their hydrogen vertical spend start. But, they need significant amount of capital for that, fairly large. They would be requiring multiple rounds of investments. And that is just stalled for the time being. So unless and until they're able to get the growth capital, they will keep languishing. Having said that, what I believe is there are a couple of stories out there like Adani Total Gas and Adani Ports, which offer very lucrative dividend yields with sacrosanct business models, good margins. And, I would be a buyer in these stocks, but I'm just waiting for the air to clear around the SIT report that is scheduled maybe over the next 5 to 6 months.
Escorts Kubota came out with its numbers a while ago. Profits at about 185 crore rupees. You've got the top line growth, which has been decent at about 2183 crores. Though margins have contracted and there's been a one-time loss this quarter of about 24 crore rupees. Kunal, let's get in a quick chart check on Escorts Kubota and what the outlook is as well on some of the PSU banks in trade this afternoon.
So PSU banks, I'll start off with that because that's an interesting chart setup. Most of the PSU banking names, I was actually looking at the charts for Canara Bank, Bank of Baroda, the ones which are prominently traded in the FNO on the mid-cap end. These stocks have formed a very good recovery pattern. So after 3 days or 4 days of consistent selling, the patterns on the daily charts, it's more like a bullish hammer. So that's generally an indication that maybe the near-term trend, the downtrend could probably be reversed for these names. So we may expect some bit of recovery. So the weaker end of the market, which was actually troubling the banking index since the last 4 or 5 days, which is the PSU banking stocks, those stocks seem to be now getting at a phase where maybe the selling could stop. So we need to see that whether the PSU banking stocks rally and whether the private sector banks correct just to get into a balance for the bank Nifty. But I think as of now, the PSU banking stocks look to be a bit more attractive. Escorts, on the other hand, the stock has a huge resistance at the 2100 mark. This is the exact point from where the stock reversed in the month of February, March, as well as in the month of April. And from there, the stock had corrected to 1800 odd levels. So this time around as well, the last 2 days back, the stock made a high of 2100. So which means that it's better to wait out for a confirmation when the stock breaks past about 2100 mark and then go into a buy mode for the stock.
Right, okay. Eicher Motors as well set to declare its numbers. Let me take it across to Shrishti. Remember, both revenue as well as profits were expected to inch up on a year-on-year basis and new launch plans as well. Shrishti, I guess, would be a key factor to watch, right?
Absolutely. And talking about the volume growth this time around, yes, there has been a jump on a YY basis, but sequentially the volumes were almost flat with 2.5% of the jump, and that's what we are expecting. A similar kind of a performance onto the top line of the company. Not much expectation. A muted growth is expected this time around. A number of 3,718 crores is what we are expecting, and that will be on the back of the lower average selling price of the vehicles. The product mix wasn't that strong this time around, and the price protection was also given to the consumers. So on the back of the products that were not much higher or not that expensive, the case in point being Hunter 350, because of that mix, the revenue is expected to show a muted growth. But coming to the margins of the company, that is expected to actually move up from 23% in the last quarter to 24.2% this time around, and the jump will be led by the operating leverage, better realizations, as well as the rebound in the export markets is what we are seeing, as well as their spare business. That is a very high margin segment that is also expected to support the numbers of the company On to the profit figure, a jump of 9.5% is what we are expecting. 810 crores is the expectation on that front. But other than that, talking about their VECV, EBITDA margins is also expected to improve on the back of improved volumes that we have seen. So all in all, a decent set expected from Eicher Motors. But nevertheless, the stock has corrected significantly from its 52-week high levels. So any surprise on the margins or the profit figure of the company will be considered good for Eicher Motors. But definitely we'll be watching out for the new launch plans and the outlook of their exports business, because on the year-on-year basis we have seen just a growth of 4%. Back to you.
Okay. All right, now Asian Paints is also due to declare their Q4 numbers. Now Asian Paints is coming at a time when things on the raw material front are in a sense just evening out. What should we expect from Asian Paints? Lisa joins us with details on what you should expect from Asian Paints Q4 numbers.
After a dismal third quarter, we are expecting good set of numbers from Asian Paints this time. Volumes are expected to recover this time around owing to gradual recovery that we saw in demand in fourth quarter. As far as numbers are concerned, consolidated revenues are expected to come in at about 8,850 crores, which will be an uptick of about 2.5% on a year-on-year basis. Meanwhile, margins are also expected to recover this quarter owing to lower raw material prices that we saw in the quarter gone by. Both crude oil as well as other raw material prices have declined anywhere between 12 to 15% on a year-on-year basis, as a result of which margins are expected to expand by about 140 basis points on a year-on-year basis. Remember, company had also undertaken a lot of price hikes in the quarter gone by, which will also aid margins this quarter. As far as key monitorables are concerned, management commentary, price hikes, intensifying competition in the paint industry, as well as management guidance on FY24 guidance will be crucial. All in all, strong set of numbers are expected. Higher volumes, strong demand, and the price hikes that the company had undertaken in the quarter gone by, coupled with lower raw material prices, are expected to aid numbers this time.
Okay, that's Ashesha telling us what to expect from Asian Paints, not Lisa. But let's go back to Srishti, find out what to expect from DRL.
Well, if we see the expectation this time around, so on a sequential basis, we are expecting a decline onto all the headline numbers. That's on the back of a muted set of a performance coming in for their India business, as well as a degrowth for their US business on a sequential basis. But other than, if you look at the numbers on a YOY basis, then we are expecting a healthy jump. So let's quickly look out the India sales expectation this time around. The sales is expected to be up 13% on a YOY basis, but down 7% on a quarter-on-quarter basis, and 1,050 crores is what we are expecting for their India division. The other main division is their US business, wherein the G Revlimid, that particular drug, sales is expected to be flat on a quarter-on-quarter basis. Not much support coming over there, and overall, if we see, then a 24% of decline or a degrowth on their revenue for the US markets is expected, with $285 million is the expectation. Now let's come to the headline numbers. Onto the revenue front, we are expecting 6,043 crores. That will be a degrowth of 11%. EBITDA is expected at 1,510 crores, and the margins are also expected to decline from 30.4% last quarter to 25% this time around. And lastly, onto the profit figure, we are expecting a 941 crores onto the bottom line of the company, and that will be a decline of 29% on a quarter-on-quarter basis. It does have an impact of the seasonality as well as the pricing pressure in the US markets, but lots more to look out for the management commentary, where the commentary on the margins, the commentary on the sales, specifically the G Revlimid sales, as well as the product new launches for the next 12 to 15 months in the US markets will be the key to watch out for. So that's the expectation from Dr. Reddy's. Back to you.
Lots of big numbers tomorrow. Asian Paints and Dr. Reddy's as well. We'll be closely watching out for that. But let's move right on then and reconnect with our charters to find out their BTST trades. Kunal?
So, Avan, I'll suggest a couple of buy calls, and looking at the theme of the market, pharma seems to be one of the stocks which I would be interested in. So, DV Slab is a stock which I would suggest as a buy, targets of 35.50, stop loss at 3350. And Tata Communication, a stock which did exceedingly well yesterday. Today, the stock is down 1.5%. I think it's a good time the stock could be bottom to on a contra play, because it's come back towards the neckline of a very strong breakout, which it had seen yesterday. So, contra buy on Tata Communications starting at current levels, 1330 as a target, stop us at 1250.
All Right, Naresh, let's get in your recommendations. Kunal's going with the buy list, and so are you.
So I'll go with one of the names. The other name has already moved up quite a bit in the last few minutes. First, that's a buy on IndusInd Bank, closing well above 1170 levels. Strong indication of momentum, relative strength. A target price of 1200 and a stop loss at 1155.
Beneath, why is IndusInd Bank underperforming? Last 2-3 quarters have been good for them, but markets they continue to worry about sometimes the book quality, sometimes the growth number, sometimes what's going to happen to the Hinduja stake. Why is that markets are not giving a clean sheet to IndusInd Bank?
So all that you mentioned have been always an overhang of the stock. But I think with the economy doing well and the banking sector firing, and I believe that the benign interest rate regime that is upon us over the next 2 to 3 quarters, augurs well for IndusInd Bank. I believe there will be a strong catch up with this stock, and I think it will outperform the entire banking pack.
Vinith, from March 29 lows up until now, have you added positions anywhere? What have been your latest buys or recommendations of buys?
So, we just recently initiated on Gulf Oil. We believe that the story of the EVs is overdone. As far as CVs are concerned, at least till early 2030s, we don't expect CVs to get electric on a massive scale. Even if you talk about the 2Vs, healthy penetration playing out into 2026, we believe that the quantum of vehicles that are there on the roads today, which are non-EV, will continue to multiply. And Gulf Oil is gaining market share, they're gaining OEM share, they're building out their network. Plus, they're also getting future ready with the rollout for the EV infrastructure. They have taken a stake in a UK-based home charging company, and here they also have a infrastructure platform where they have a significant stake, and this stake for charging has got a very large market share, about 40%. This platform is called Electrify. And given all these future-ready plans, their current business, and they're expected to grow volumes at double digits over the next 4 to 5 years, I think this augurs very well. Last year, they did a buyback, and they quoted a significant discount to Castrol. They've got a very large growth factor there, and we think that the PEG ratio ordains us to put a premium on Gulf Oil rather than on Castrol. So we are very bullish on this stock. The other stocks that we like is Eicher Motors, who is reporting today. We are bullish on KC International, where we expect margins to come back, and 15 to 20% growth with margins going from 5% to 8%. That is what they commented as an exit rate over the next year. So I think on an 18-month period, this stock is a resounding play. These are some of the large cap and mid cap ideas that we are recommending to our clients.
Some interesting recommendations being flagged off by Vineet as some of his top trading recommendations. A quick call then, Kunal, we're just about ready to wrap up the markets as to what the outlook is on the charts of something like Tata Motors as well as Bajaj Auto, Maruti, they're all holding out comfortably in the green.
I think Tata Motors I am bullish on. Again, to reiterate the fact that it looks very attractive on the charts, and this is something which I believe is heading towards a big breakout on the monthly time frame charts. So would continue to have a bullish stance on Tata Motors. Bajaj Auto as well as the other names. I think Maruti could be interesting out of the two stocks which you mentioned, because Maruti is now showing some signs of swing breakout. So there is more consistency in the chart pattern as compared to what we've seen for Maruti, say, in the entire 2022, where the stock lacked a lot of consistency for itself. Breakouts were not sustaining. The breakouts converted itself into more of a false up move for Maruti. But this time around, that's the only change which we're seeing on the stock price, which means that could be a good sign for the stock to emerge as a potential upward trend from current levels. So Tata Motors extremely bullish on from current levels. Maruti could be something which I believe short-term traders can keep an eye on.
Tata Motors, Maruti, the stocks to look out for. Naresh, anything that you're spotting right now?
So looking at Axis and IndusInd Bank to take leadership, they're showing a lot of relative strength, and PSEs continue to show momentum. NTPC could be the next one off the block.
Let's wrap up the markets then for you. And Good enough, given that we are actually wrapping up above the 18,300 print in today's trading session. The broader markets as well, and you can see that attempt to pull back at the fag end of the trading day, and that has taken that market breadth as well, skewed slightly in favor of the gaining side. And what's supportive, you did have quite a few rate sensitives, so something like Realty, Auto in the green, FMCG, and to a certain extent banks, but it's actually been media that's scaled up. To the winners then in today's trading session, you've got IndusInd Bank at the top of the heap, brokerages as well quite positive, Powergrid, HDFC Life, Tata Motors, and all of the auto stocks have had a pretty good run up today. Bajaj Finance quotes higher by about 1%, HDFC Bank lends a helping hand, and Reliance Industries wraps up the day at 24.90. On the flip side, UPL continues to lose out, Dr. Reddy's a bit choppy, ditto with Sun Pharma, Titan, Infi, and Adani Enterprises, some of the other losers in trade. We had a few result reactions. Escorts Kubota, Lupin came out with its quarterly numbers, something like a Venky's, Serra, BASF, Aarti Industries, and as well as numbers flashing at the bottom of your screens like a Relaxo. Within the broader markets, KEC scales up, EPL, Cyient, Sobha, Minda Corp, EIL, Godrej Industries, Dishman Carbojet all had a terrific run, while on the flip side, Rail Vikas Nigam, PNB, Godrej Agrovet, Indian Bank, KEI along with Aditya Birla Fashion. I actually forgot to mention those PSU banks. They continue to remain under pressure. Remember, CLSA says that they see 0.8 to 1.5% of the loans as provisions for PSUs. Come tomorrow, the street will closely be eyeing numbers of Asian Paints as well as Eicher Motors among the Nifty companies. On that note, though, we're completely out of time on this leg of closing trades. Thanks so much for watching.